Hello, honored here to be interviewing today with Rick Cunningham. Rick, I'm so excited to see your recent award from the Swano Poll, recognizing you as one of the top leading professionals in real estate in the country. So congratulations on that.
Oh, thank you.
Yeah, and for those of you that might not know Rick Cunningham, he's the owner and operator of several of our Keller Williams offices throughout California and Hawaii. And I've been honored to be a part of the Keller Williams business here at the Coastside office in Half Moon Bay with Rick the last 7 years. So super excited to have you on today, Rick. Yeah, so I'm hoping we can just touch a little bit on 2020 coming out of last year, obviously with the backdrop of COVID. Hopefully we're with the vaccine and we're going to start seeing some hope as we pull out and the opening of the market and the economy this year in 2021. I'm curious what you think we're going to see with from the mortgage rates to home prices, what the recovery might look like, and love to touch on Prop 19 and how that's going to affect us here in California. So you want to dive in maybe a little bit about 2020? I know that you have not just real estate offices, but other offices like coffee shops and things. So I'm kind of curious what your thoughts are on how this unemployment has hit different areas and different industries in different ways.
Yeah, so there's something called it's a K-shaped recovery. So there's the people that are really succeeding in the economy in 2020 and moving forward into 2021. But like real estate, we're shocked and surprised how well real estate is performing. But it makes sense when we look, back at 2020 and the reasons why. Unlike my coffee shops, which are hemorrhaging like any restaurants out there, and again, so I personally experienced the difference between businesses excelling in a COVID environment versus ones that are not. So it is a K-shaped recovery, and again, you just have to look at like the fundamentals of the industry that people are in and whether it's performing or not performing.
One thing I don't know if any of us could have predicted in first quarter, second quarter last year, we were already heading into one of the best real estate markets I think we were ever going to see in 2019. It was up, it was great. Wheels fell off in the second quarter. We had to relearn how to, do our business again, and can we do our business, and how are we going to do it? Then third and fourth quarter ended up, prices went up year over year, a good 12 and 14%. We're seeing throughout California alone. So our area here, we didn't predict that surge in prices. I'd be curious, Rick, what do you think? Where we headed in 2021 with prices, in your opinion, when it comes to rates? That's a big question now. And also, can these prices hold throughout the year? In your thoughts?
I do believe rates are going to stay low until the vaccine is really readily available and most people are vaccinated. I think that until such time, that is one of the tools that I think the Federal Reserve will work with the government to keep the rates low in order to keep the government stimulated. I think they have to. However, on the flip side, that actually you'd think it would cause a lot more sales. The reality, it causes buyers not to move as quickly as they would, because if they felt interest rates were going to increase, they would actually potentially move quicker on making a purchase now. So buyers are taking more of a wait and see. But the problem is the market is so hot and accelerated. It's the lack of inventory continues to be our biggest problem. It was our problem before COVID because of we're at crisis level housing, because the problem was after the 2008 recession, and there was such an overbuild of real estate housing stock that we never got back on track for the housing nationwide, not just California, but California is problematic too. But there's not enough housing stock to meet the demand of the growth of our population.
Yeah, I think touching on just the shortage of inventory, despite everything that's happening out there with work from home, and a lot of companies are moving to different areas out of Bay Area. I know we had a listing last weekend where we had 40 showings. We had agents had to make appointments throughout the day, and we were booked for 2 straight days. They couldn't even get in to see the house. We're expecting 6 to 10 offers on that property today. So we are seeing a demand. So I think you touched on shortage of inventory. You expect that to keep our prices at least hopefully level, maybe even staying, maybe even higher this year.
Yeah, I believe they'll be higher. The residential market, I believe to be much higher.
So
I shouldn't say much higher. I believe, if it's 4 to 5%, when you're talking about an average price point in the territories that we operate, we're talking about a significant increase in that overall actual cash value.
So we're talking specifically here on California, probably Bay Area, LA County, Hawaii. I'm not sure, every areas can be a little different. We do expect ripple effects, obviously, but it sounds like you're saying because of shortage of inventory, rates are still going to stay low, that we do not expect a change in prices and maybe even go up. And I guess my big question we hear a lot is, how is this different from 2008, 2009? I mean, people are nervous that the prices are going to go 25%, 30%. We're going to see short sales. How is this different?
It's completely different. And it's based on fundamentals such as the Dodd-Frank legislation. Mm-hmm. Dodd-Frank came in and really changed the way the mortgage underwriting was done. And so now more than ever in history, not only do homeowners have more equity in their properties, but the banks have more on their balance sheets. So it doesn't mean that we won't have short sales or foreclosures. It just means that we will not have the impact like we did before. That it was a domino effect. So once you have too much housing stock, there was stated income, stated asset loans. Nobody had enough skin in the game, and therefore they left. And once the prices started tumbling, then it was causing the next group down to say, you know what, the prices are now lower than my mortgage too. I might as well walk away. And there wasn't this kind of repercussion about it. But right now, people have too much equity. So people are not going to walk away from their equity. And there wasn't things such as like iBuyer platforms, auctions at a level that it is now. So there is distribution channels that didn't exist at the level they do at the current time. And then people have too much equity. So they're going to look at, how do I sell my house right now in the next 7 days? So that way I avoid foreclosure, I get my property, and I get as much equity as I can, and I can walk away and move on with my life. And now I don't have the credit problem that they've experienced in the past. So we will not, absolutely, I bet my entire career on the fact, we will not have the economic problem that we have in 2008 as long as this pandemic can be wrapped up and we can have the majority of the population and we can get our economy back in a pretty good semblance of what it was pre-COVID. If you're not going to buy or sell right now, then go refinance, because chances are that your rate is at least, half a point, maybe in 3/4 of a point higher than it is right now. And you could refinance out of that and get a lower rate, or why not change it and convert it to a 15-year note and get it paid down quicker for about the same amount of money. So yeah. We've never seen the refinance rates happening at the speed that we're seeing right now.
Yeah, our lenders are busy. So just on a last note here, Prop 19, Rick. So can you tell us a little bit how Prop 19 now opens the doors for people to keep those property taxes low?
Yeah, so what you're referring to that has been in existence, it's been in existence since 1978. It's called Prop 13. And yes, a one-time where you could move your tax basis. And the way it worked is every year your property taxes goes up by 2%. So the longer you stay in your house and the older you are, the better the advantage of the tax basis being able to be moved, right? So now you can move the tax. So there's a pro and con to Prop 19. On the positive side for homeowners, you can move your tax basis up to 3 times. You no longer have to downsize. You can actually buy a more expensive house. So you can move your tax basis that exists. So let's say that you have $1 million house and now you want to buy a $2 million house. You're 62 years old. You want to make the move right now. You can move the tax basis of that $1 million on the same rate that you have. And then you pay the market rate difference on the $1 million difference if you want to buy up. So that's how they account for that. Again, it can be done up to 3 times. You can
and
also,
all in California
just 9 counties, now it's the entire state.
Oh, that's great. Well, thank you. That's definitely going to be open up some doors for people and to move into different areas and different counties.
That was the effect of it is the expectation that people will now sell. Some people will have to sell because they inherited it. So because the tax basis goes up, and maybe like if they do own a strip center and 2 of their tenants now are not paying rent and vacating, they're going to have to sell, and they probably have good equity, and they may need to sell that property, and now that creates a sale. On the flip side, all of a sudden you have these seniors that felt like they're trapped in their homes. Now they have the ability to sell that housing stock, and so therefore now you get 2 more transactions: the list side in which they sell, and a usual purchase on where they're buying and relocating. And oftentimes they're relocating to where their children are.
That's great advice. Well, thank you so much, Rick, for your time today. Really enjoyed hearing your thoughts on coming out of 2020 as we're heading into 2021. It's going to be an exciting year. Any of you out there that have any questions about your local markets, please reach out. We'd love to talk to you. Thank you. It's going to be an exciting time.